Brexit would be good for Britain and it would not destroy the financial markets. To leave the EU would send a signal to the elite, the political class, the bureaucrats that impose regulation and new laws that stifle economic development, that they can only go this far.
Famous investor Mark Faber says a UK exit from the European Union would be great for the country. So polls are closed, tallying up of the votes happening now. Investors on edge waiting to see which way the vote will go and how the markets will respond. With me now, author, economist, currency expert Jim Rickards. Jim, great to see you.
Great to be here, Deidre.
You literally wrote the book on currency wars. So how do you see this decision either way affecting U.S. investors, if at all?
Well, look, it's too close to call. We'll see. The polls have shown that. We'll see how it plays out. I don't know how it's going to turn out, but I would say that the markets have priced Remain, which tracks based on some betting odds. So the markets are priced for Remain. So if Remain wins, not a lot happens. There'll be some profit taking, but not an earthquake. If Leave wins, it will be an earthquake because the markets are leaning all the other way. I kind of like gold at this entry point because it's been beaten down.
Yeah, it's at a 2-week low, I think.
Correct. The basic trend is up, but it's down about $40 an ounce in the past 2 weeks. So if all the Remain damage is done to gold, then it kind of has nowhere to go from up here, but up from here.
And of course, in the past, people look to gold when they believe that the markets are less stable or more difficult to call. It just becomes a safe haven play, right?
There is a safe haven play, but I think a better, more important way to understand gold is it's just the dollar price of gold is just the inverse of the dollar, Deidre. So a strong dollar means a lower dollar price for gold. We saw that from 2011 to 2015. A weaker dollar means a higher dollar price for gold. So if you want to know what gold's going to do, just ask yourself, what's the dollar going to do? Yellen is out to weaken the dollar. She has to. She's desperate for inflation, can't get it. They raised rates when they should have, maybe.
Wish we built like a little seesaw animation, so we have gold, dollar, well, that's, drive it home. Well, but I hear what you're saying as far as the Fed's role as well.
Right. It makes the point that gold is money. I actually don't think of gold as an investment. I don't think of it as a commodity. I think of it as money. So to me, gold dollar is just another cross rate. It's like euro dollar, sterling dollar. It's just another cross rate. And so if one's going down, the other one has to go up. We need a weaker dollar to import inflation. Yellen is desperate to get inflation. She's gone full dove, not going to raise rates for maybe December, we'll see, but not for the rest of the year as far as I can tell. And so that's very bullish for gold.
All right, so very bullish for gold, and I'm assuming will help U.S. manufacturers, yeah? Because if the dollar is lower, our goods, our services will look a lot more attractive. We will have cheaper goods to offer, right?
In the short run, it can be very good for U.S. manufacturers. We just saw Boeing had this big order with Iran, and that did not go to Airbus. So a weaker dollar helps people like Boeing. But the problem, Deidre, it doesn't do anything for world growth. It can help the country with the cheap currency, but all it does is steal it from your trading partners. It doesn't do anything for world growth, and that's a bigger problem. Japan had a weak currency for 3 years, 2013 to 2016. They didn't make any structural reforms. They didn't empower women. They didn't allow immigration. They didn't fix up the retail sector. So now they're being told by G4, you got to have a stronger currency, weaker dollar, and it is good for exports in the short run.
So, Jim, with your global view, Mark Faber told me yesterday he thinks that Europe is becoming increasingly irrelevant as a block of nation states, let's call it. How do you see Europe versus Asia? He's all on Asia. Heavy versus North America. Well,
I like Mark a lot, and I have a lot of respect for him, but I disagree on Europe. I think actually Europe is a very solid story. The European Union is not going to fall apart. Even if the UK leaves, we're not sure, but even if they do leave, that will have very little impact on the rest of Europe. There's a homogeneity there that doesn't apply to the UK. It's the world's largest economy if you take it as a block. They've got 10,000 tons of gold, which is more than the United States. They've got good technology, and there'll be a China. It's basically China, Russia, Europe, and the rest of the world trying to get out from under the dollar. So Europe will be part of that in the future.
All right, Jim Rickards, around the world in a minute. I thank you very much,
thank
sir.
You.
Jim Rickards with me there, author and currency expert.